Car insurance prices in the last several years has increased over 50% overall. And there's a couple reasons, but more so, let me show you how to shop your insurance to make sure that you not only get the best prices, but you also get the best coverage for the price that you need. At the end of the day, you don't want to be the one wondering if you're covered correctly and saved an extra $3 versus paying the extra $3 and actually having the coverage that you needed for certain scenarios. So let's go over the ways to shop. The first piece is you need to understand the coverages that you should carry. I've got a video that goes a lot more in depth, but there's really only three types of coverages for car insurance. You've got coverage for you, coverage for others, and coverage for your vehicle. Starting with the middle finger, which is the coverage for others, that's going to be the liability limits. That's essentially what your car insurance will pay. It's also the reason that prices have increased. Obviously, the dollar is worth less, bananas cost more, medical costs more, all of those things are increases. But most states are starting to realize that the state minimums that they've set are not high enough. A lot of people are having accidents and it's not enough to cover the scenario, and then lawsuits happen, all of those things. That means that most states, even though their state minimums are $25,000 per person if you hurt one person, and then $50,000 per accident if you hurt multiple people. That's usually not enough anymore because of the cost of medical, the cost of prices, all of those things. What states are starting to do is increase those numbers. So in some states, you're seeing that increase. That is the coverage for others. Now, the other coverage for others is their car, their property. It's called property damage. And that usually starts at $10,000. Not enough, I'll be honest with you. If you ever have an accident and you hit a Yukon, that's a $50,000, $60,000, $80,000 vehicle. If you total that vehicle, you don't want to find out that you only have 10,000 property damage and their car was 50 grand. That means you're on the hook for 40 grand and they're going to sue you. Now, I don't have anything for them to take. You got to be careful because they can take your income. They can take up to 30% in most states over your working life. I can't live off of 30% less than what I make today because I spend it all. I gotta have the next video get, I don't know. You spend it on what you want. But in general, make sure that you have that property damage as high as they'll allow. At least 100,000 is what I say. If you have to cut the budget, 50,000, that way you have most of the scenarios covered. By the way, that coverage isn't that expensive in most states. So increasing that really doesn't make as big of an impact as you would think. If you are trying to shop for insurance, I'm going to give you a cheat sheet here in a moment that will give you an idea of how to shop across different places. But most of the time, just calling an independent agent can help you out. I'll put a link in the description below where you can get a quote from an independent agent if you are shopping for car insurance. They typically will shop you across multiple companies so that you don't have to. The biggest piece is most people don't realize that it doesn't cost anything extra. The companies are either going to pocket the money, and that's part of their expenses for marketing, or they're going to pay an agent to work with you. So it makes more sense to deal with the agent than it does directly to the company because they have your best interest in mind in most scenarios. And if the prices get ridiculously high because the product prices change with each company, then they can chop you across their market again and find you a better deal if they need to. Again, we're not going to go too far in depth on the coverages, but the coverage for others, that's your liability limits. The coverage for you is any type of medical. Some states require you to have something called personal injury protection or med pay. In those scenarios, that's coverage for you or people in your car. If you're doing medical payments, it's typically per person. So if I have 5,000 med pay, each person in my car, if they get injured, has that additional coverage. And then there's protecting yourself against people that do carry those state minimums. There are some states that actually don't even require you to carry the bodily injury limits. So if they hit you and it's their fault and they have nothing to go after, they don't even have an income, then there's not much for you to go take from them. In those cases, they allow you to insure yourself for what's called underinsured motorist or uninsured if it's a hit and run. That way, if they don't have insurance or have less insurance than you, then you can carry the additional coverage that you would like to carry. Now, the third piece, which is the end here, is the coverage for your vehicle. That just depends on if you want what's called full coverage. It's really a made-up word. It's comprehensive and collision, and there's a whole lot of a la carte things that you can add on. Towing, road service, rental car, accident forgiveness, vanishing deductible. All those little pieces are additional pieces that you can add on to a policy. Typically, you can't add those extra little pieces unless you have comprehensive and collision, which is what the term full coverage typically makes up. In this case, you're going to pick a deductible, so you'll pay whatever you choose, and that lowers your cost of insurance. You're technically saying, let's partner up. I'll pay the first $1,000 of the claim. You pay whatever's left to repair my car or replace my car. In those cases, some people might say, I'll pay $1,500. That lowers the cost of your insurance that you pay monthly because you're holding more risk in your hand and not requiring the insurance company to not hold all of that risk. Now, on top of that, there's discounts. We're not going to go, again, heavy into that. I've got a video I'll link at the end here as well. We'll go over the top 10 discounts. If you're combining your home and your auto, that makes a huge price. You can knock off 20 to 30% by just doing that. If you're a renter, sometimes having renter's insurance, I know, listen, ready, having renter's insurance is cheaper than having just car insurance. So having extra coverage might be a benefit, but also might make the policy less expensive. It depends on the scenario. Talk to your agent to see if that's a good fit. Again, if you don't have an agent, fill out the quote insurance below, and we'll try to connect you with the local agent. Affiliations, if you're a CPA, if you're a tax person, if you're a government employee, if you're military, if you're a nurse, all of these things, if there's different even car ownerships, motorcycle ownership, Harley-Davidson Club, credit union members, there are discounts that a lot of these companies give for those occupational situations that are called affiliate discounts. Go ahead and let the agent know any affiliations that you have or any clubs or memberships that you're part of, because it can get you a discount on your insurance. Okay, Mark, but this is all about how do I shop for the best deal? How do I get the best price? How do I find the best company? And what's that cheat sheet you're talking about? Here's the piece. When people shop, they typically get lazy, and I honestly understand it, because nobody likes talking for an hour and a half on the phone with a couple agents, 10 minutes with some that just don't care, and finding the best deal. If you're going to shop, the best way to do this is to do an apples to apples. That's a catch-22 phrase, because most companies purposely don't do apples to apples comparison. There's some companies that increase the coverage $1,000 just because they want their coverage to be a little bit different or a little bit better than that next guy, and their price might be cheaper. So because of that, there's not an easy way to do the apples to apples if you're going outside of the typical coverage. So if you're just looking for the coverage for you, coverage for others, coverage for your car, most companies are going to let you do almost identical coverage options. When you're doing that, make sure you understand the limits. And again, I'll link a video at the end that goes over those. But if you are looking to do that, pick the coverages you want to lean towards and then start to compare those with different companies that you want to lean towards. Be careful of the online tools, because it is a lot more confusing if you go directly to progressive.com or geico.com or statefarm.com. If they give you an option, they usually have little tweaks because they get it. You're trying to do an apples to apples. They may not give you an apples to apples, and you might have to edit it individually to even compare. So when you're looking at that great price that you saw, make sure that it is the right coverage, because I find more often than not, when there is a great price, something was slashed out of that policy. Even when you're working with agents, when you're calling a non-independent agent, somebody that works straight for one company, they don't have another option to be competitive in some scenarios. Sometimes they are, but in most cases, if they're not, they've got to start chopping things off to at least get your business. So be careful when you're working with that type of agent. Not that they're bad people, but when there's not another product, they have to survive and give you an option. Outside of all of those pieces, determine what are those extra coverages that you want to carry that are important to you, i.e. towing and road service. Do you want $100 of towing or road service? Do you want unlimited? Some companies do unlimited up to a certain amount. Do you want the vanishing deductible? Do you want what's called a savings bank or a gap insurance type coverage, where if your car is worth $10,000 but you owe $15,000, do you want your insurance to pay that off? These are additional coverages that don't come on that base policy, and not all companies offer it. So those are some of the benefits when you are comparing a Geico versus a Nationwide versus an Allstate. Who has those coverages that you want? Actually, technically they all do, so just ignore. There are companies that don't do that. But if that is the case, then make sure that you have the benefits that you're looking for, and just start with what you would love to carry. I want vanishing deductible. I want the best road service and towing. I want the loan payoff if I have that. Check your prices to see what that is first. You would be surprised. Might be ridiculously high, but you won't know until you check at least a few options, and then take a look at those other options that you have. If that's too expensive and it doesn't fit what you're looking for, then back it down one. Most of those agents are going to offer that anyways. So if you are working with an independent agent, then they're typically going to offer some good fits that they think are going to be a good option, and then voice it off to you to see what your thoughts are. Money left on the table. Be very careful. If you are not quoting your home and your auto together and you own a home, or you're renting and paying for renter's insurance, it's a headache. I get it. You have to call your other insurance and tell them you're not going to do it anymore. You have to tell the apartment building if you're renting that you switched insurance, or you got to change the loan company and let them know. It's extra work. I get that part. And it's a little bit annoying, to be honest with you. But you would be so shocked on how much of a price difference it makes to combine everything together. Not always. Sometimes I see quotes where having the home with one company and the auto with another is a better option and cheaper, but still good fits for coverage. So that can be the scenario, but try first to see what your options are before you start diving into that. So just to recap, when you are shopping insurance, know what coverages you want to carry, gather the key information. You need to know what type of vehicle you have, how many drivers or non-drivers are in the home, because that does matter for insurance. They have to put all the risks together. Get the VIN, the vehicle identification number, if you have that in the vehicle. Not necessarily needed for the quote. The address they're going to ask for, because the zip code, even though you would think you could just give somebody a zip code and they'll give you a price. If you don't trust who you're talking to, sure, make up an address, move it 3 houses down, get a quote out of there. The problem is you're going to run into is insurance is based on what I call a profile. So they are checking insurance scores. That is your history, your claims, your credit in a piece of it. I'll link a video that goes very in depth on the actual insurance score, but the insurance score is also taking into consideration the risk of your vehicle and the drivers that are in your house or non-drivers that are in your home. So those pieces are based on it. And when you just make up data, you're not going to get an accurate information. That's why a lot of these companies don't even want to give you a quote if you're not willing to give the right information. Again, you can still get a base one. They won't necessarily pull your insurance score correctly, but if you are doing that, just do 123 Main Street and there you go. But make sure you put the right zip code in, because the zip code is the biggest factor that will determine the location and the risk around you. If that's the case, you should be looking at different companies if they're not competitive, because that means that this company is not competitive in this area. That doesn't mean that company is not competitive in your area either. Let me know what your thoughts are. Is there anything that you do when you check your insurance? How often do you check your insurance, and how often do you think it should be? I'm a fan of between 3 to 5 years because there's certain discounts tied to it, but some people shop every renewal. Let me know in the comments below what your thoughts are. The video that we talked about earlier, which is understand the coverages you should carry, that's our Car Insurance 101. That's going to go in depth on the specific coverages that most people are looking for. The video that we talked about also is how to get the best pricing, and that's the 10 discounts that you might be missing or that you should be thinking of. I'm Mark with Think Insurance. I'll see you in the next one.